Good afternoon, everyone, and welcome. First and foremost, I want to say thank you to everybody. It's really great to see everybody. I know for some of you, this might be your first travel experience since the whole pandemic happened. For others that have been traveling all year, welcome back. It's really great to see everyone. I know there's been so many sessions where everybody's talked about just getting together again in person. So I'm glad we're not doing this on Zoom or Teams or whatever, because I think we have that kind of fatigue, but it's really great to see everybody. Today we're going to talk about one of our favorite subjects. We've been hearing a lot about supply chain. It seems to be a catchword that's out in the marketplace that a lot of people weren't talking so deep about, but now supply chain has really affected not only our industry, but the entire global economy from a supply chain perspective. I want to take a moment to introduce myself. I'm Vince Purvis, President of Consolidated Concepts. I'm part of a parent company called Buyer's Edge Platform, and we're in the supply chain optimization business. Data management, optimization, scaling contracts, pricing, etc. And we have a great panel today that we're going to talk about supply chain. We all know it's a little bit fragmented and a little bit challenged today. Supply chain was typically a support function in many operations for many years, and you're seeing supply chain really at the seat at the table in the C-suite, very involved in all decisions because operationally it affects so much today. So with that, we're going to kind of dive right in. Couple, housekeeping components. The session's 45 minutes. We are going to reserve at least 10 minutes towards the end of the session for Q&A. So be thinking about those questions, and we'd love to hear from you and address any concerns and opportunities. So first and foremost, really want to just open it up to the panel. And again, as we ask this question, they're all going to introduce themselves of what you do and what's going on in your marketplace. But primarily, we all recognize today is very volatile in supply chain. And I'd like to ask each one of you, if you don't mind, and I'll start with Susan, is what's going on with your operations today and how is supply chain affecting you?
So my name is Susan Taylor. I'm the CEO and president of Juice It Up. It's a 26-year-old brand that we're based in Newport Beach, California. We sell smoothies, juices, and bowls, all handcrafted. I would say that the biggest challenge that we've had over the past year and a half, the major disruption has been on the distribution side. Prior to the pandemic starting, our business was fairly regular. We would look at what we were selling. We had long-term contracts with different vendors. Everything was set up, and we had a distribution partner that delivered all the product. And things have kind of gone off the rails in this past year that has challenged us in getting a sense of normalcy for our franchisees. We're 99% franchise owned, so I have all the franchisees as my customers asking me how I can help them manage through this as well too.
Thank you.
You're welcome.
Brenda, how about you?
Hi everyone, my name's Brenda Serrano. I am the Director of Supply Chain Operations at the Cheesecake Factory. And we've been hit from all angles, just like everyone else. From plants being shut down because someone had COVID, so they're shut down for 14 days. When it's your protein, it kind of hurts. We had Edward Don got hacked into and held for ransom. Weird things that you don't even expect. Then there's the whole supply chain issue and trucking and labor and everything that goes behind that. So, there's a lot of challenges to overcome. And like we were talking earlier, every day is a new fire drill. But from this, we learn, we move on, and we get through it until the next fire drill.
Very true.
And we're certainly going to ask Denise what's going on in your world.
So my name is Denise Herrera. I'm the co-founding chef of Burton's Grill and Bar. We have 17 locations under Burton's Grill and then 5 locations under Red Heat Tavern, and we operate mainly on the East Coast. So my current role is Vice President of Food and Beverage. So I do manage the supply chain and procurement for our concepts, and everything that you ladies have said, I echo in twofold. I thought that not having kegs was one area, then I couldn't get Jack Daniels for another area. And for me, we don't like to 86 products, so we have to just be nimble and try to understand how we can backfill some of our disruptions and not really make excuses, but really find resources and partners that can help us fulfill the supply chain issues that we're seeing on our end.
Yep. It's pretty chaotic out there, and I think everybody in the room can probably agree from a perspective of operational service levels and fill rates, right? Mm-hmm. Because when this thing first happened, when everything shut down, things went down to 50, 60% fill rates as the demand started opening up a little bit more. Having connections with your distribution network, just looking at the fill rates and what you can do to kind of prevent some things is trying to be as proactive as possible, right? I know just been talking to, whether it be Cisco, whether it be PFG, US Foods, you're seeing fill rates now creeping up into the mid 80s and maybe even 90% again, but it's a far reach from where the industry used to be at 98, 99% fill rates as a standard. And if you were less than 98, you had an issue, right? That was a big deal. Now a lot of us out there in the industry today are kind of just waiting for the next shoe to drop of what is the issue. We've touched on labor, we've touched on COVID, we talked collateral industries that's affecting service level. It's not just labor, it's fuel, it's process, it's efficiency and stuff like that. So from a standpoint of, I guess, what are you doing to be proactive in the marketplace with service level issues or out of stocks? How are you managing that? And I'll open it up to anybody that wants to address that, right out of the gate if you would like to. Denise?
Yeah, sure, absolutely. Yeah. So I think communication is very important. I talked to all of my distributors and I ask them what are they foreseeing to be out of stock. I get out of stock reports every day before they get a delivery so I can make arrangements on what I need to do. Early on, as I saw this happening, I worked with my broadliner to create a approved sub list because standards and specifications are really important in our business. We do a lot with allergy-friendly dining, and I can't just approve any spec to come in, especially if there's wheat or something else in there that's going to affect my overall allergy commitment. So working with them on approved sub lists and then being proactive on what else can I use. I'm a chef by training, so I think having that resource is really helpful for me, especially on the food side. So I have, an issue right now that I can't get gluten-free panko breadcrumbs. So I know some items that I'm already using in my restaurant. How can I mix and match to recreate that item? So I use, a rice Chex Mix and a kettle chip potato, and I'm making a gluten-free panko in-house, and I distributed that recipe out to all of my teams late last night. So I have to figure out ways to find solutions. The other area that we're being proactive in is equipment. We work with our equipment suppliers on what are lead times. So right now we're in capital expenditure planning, and we are already talking to our partner on what do we need to order, foreseeing that it's going to go down, because I've already spoken to my repair division and saying, okay, is it a repair, is it a replace? Because there's a certain time that you have to say, I have so many years on this, the life expectancy is up, let me plan proactively, and I have, X amount of dollars allocated to pre-order that just in case it goes out. Because what happens if you don't have a grill and you're a grill concept? Yep. That can be very challenging.
So safety stock comes into play, yes. Whether it's food, equipment, any of those other type of situations.
Yeah, it's interesting because we did a lot of the same things, and I think when we first started out with some of the issues, it was like, just order some extra inventory, right? If we know that the order may be a day or two late, let's make sure that you're going to use it. The majority of the product that we use is frozen, so it's like it's not going to turn. So let's make sure that you have enough. It may be a little bit more of an upfront cost for you than you're used to spending on a weekly basis, but this way we make sure that we have it. And then we started having, the challenges with same thing where some of the products that we needed we weren't able to get. And you go for about a month of trying to just pivot in the moment, and then we just said, you know what, we've got to do the same thing. We put together a list of everything that we use, raw product, and we went through and we looked at every sub that we could possibly get and who we could get that from. And then we have a research and development scientist that works that, for us, the taste, the color, the quality of the drinks, your guests are going to notice if things change. So everything that we looked at as a sub, we had him make, and we did taste testing and just validated that if we have to go to those subs, we know that it's not going to impact the guest or the guest experience at all. But those were things that, honestly, in February, I wasn't even thinking about. And now, we're opening 13 to 15 new stores next year. The equipment part has suddenly now reared its head, where we're about 3 stores ahead of where we need to be, but we were just told that a key part of our equipment is not going to arrive until after the store is supposed to open. So we've had to go through and do the same thing. How can we make this work operationally till we get that piece of equipment? And who do we need to communicate with from like the health of the building to make sure that we're able to still open the restaurant? But really trying to, as a team, it's like, let's just really think about anything that could happen and then how do we solve for it? So we're not, I think at the very beginning we were kind of paralyzed with, oh my gosh, things aren't going the way they're supposed to be going. What do we do? And now it's just like, okay, we'll just go to plan B, C, or D, whatever we need to do.
Interesting component when we look at the panel, we have three distinct differently type brands and concepts. So from an SKU perspective, I know with my days at Cisco and my background at Cisco, Cheesecake Factory, hundreds and hundreds and hundreds of different line items and thousands, and yes. So from how are you managing the, when you look at your concept, Susan, and how many SKUs, and yours, Denise, and certainly yours, Brenda, as well, is finding those alternatives, being proactive, and how do you manage the scalability of all those things and all those balls in the air at one time? Yeah, exactly. So,
close your eyes.
Yeah.
It's interesting to note, and I think from that perspective, everybody's been out on the floor today looking, and even yesterday, at all the technology that's out on the floor. And I'd say 98% of that technology that you're seeing out front is all business to consumer or consumer to business interaction to drive sales, which is great. We all want to drive sales, and we understand the value of the technology to do that. But the supply chain technology is still lacking. And just from a PSA perspective, my company, that's where we're driving, is in the supply chain support for operators like yourselves to be able to give transparency and data flow to see inventory, to see purchase orders, to see where something's confirmed, or I'm going to be out Friday of next week versus getting the order today and getting told that I'm out for tomorrow. So that's the complexity, I think, again, is how are you navigating some of those things today? How about you, Brenda?
So for us, we're doing skip day deliveries, which gives us one day to see what the restaurant ordered and compare it to what Cisco says they're going to ship. Then we can say, okay, yeah, that's a sub, we'll accept it. There are very few secondary subs approved. We are trying to be proactive in that now, but it's like, Cheesecake Factory, everything is the same across the U.S. and in other countries. So if you change a spec, it's like going to Congress and asking them to pass a bill. So that part is very hard, which then brings us to Inside Track. They are going to do phenomenal things for us.
There's a plug. There we go.
So forecasting is huge, and that's something that I feel we fall short on, not just to our manufacturers, but to Cisco and our other distributors to make sure that they're ordering the right quantities. Because as we were talking earlier, if you get a sub, let's say you ordered 4 of your spec, well, they ran out. Now they're going to ship you 5 of the sub. So their system says, get to 4, order more. 5? Okay, I got to order 5. So you're in this perpetual sub cycle. So forecasting is going to be huge for us, and that's where we're going to become more proactive, and we'll have less subs.
Yeah. Can we pause just for a second on where you were, that skip day ordering? And I just wanted to bring that. I was on the distribution side for a long time and having conversation with operators about, can I get your order on Sunday, ship Tuesday? Can I get it on Monday, ship Wednesday? I was like, no, that's a problem for me. I can't get my operations teams to change what they do. They come in, they do their inventory, they place their order, they're expecting it tomorrow morning. I can assure you, if you think about your operations today from a supply chain perspective in today's environment, that is a critical thing to think about it from a change. You place that order, the very next morning, 8 a.m., the distributor knows where their issues are. They're communicating back to you as an operator, these are my issues, this is what I'm planning as a solution. What can we do together to solve the problem? So I think that's a key takeaway from an operation standpoint is think about that. Your distributor will appreciate it, number one, because they don't want to fail you. They don't want to out of stock you. They don't want to short you. And we got to remember the demand has been 25, 30, 40, 50% of where you were in a shutdown. It's very easy for communication from an operator to say, you know what I used to use, just get me back to that level. Well, those levels are actually being exceeded. The consumer demand is pretty high. So communication, we've talked about. Being proactive, talk about. I think if you can shift your to a skip day ordering, if possible, is a good value for your distributor and you as an operator to have line of sight before it's that Friday at 5 o'clock I didn't get, or Thursday at 5 o'clock we're out of stock for tomorrow, what am I going to do? And then again, the data and insights, again, from that perspective, is having line of sight to your needed information in your distribution network, whether it be Cisco, PFG, US Foods, the independents. You need that data. Getting a report today of what I'm out of stock, okay, that's good, but now I've got an issue I've got to solve. You really want information that tells the story of what's going to happen tomorrow and the next day and the next day. So that's another component that we really want to talk about.
Yeah, so one of the add-ons to that too is proteins. When the proteins were really tight, we did order further out. Okay, so if we were getting a truck on Monday, my chefs were placing their orders either on Friday night or Saturday so that they had that guaranteed commitment. Because once that order is into the broadliner, it's already being pulled out and allocated to you.
That's right.
So pre-allocation was also a success for us. And then another area that we also succeeded in was that we are not a one-stop shop with one vendor. So I have a lot of different vendors out there, produce, bread, dairy, broadliner. I have 2 seafood companies. So what's important is if my broadliner's out, I have a specialty dairy company that I can go and say, hey, do you have jasmine rice? Because it's not coming in yet. And he says, I don't, but I can get a pallet in tomorrow. I said, great, get the pallet, I'm committing that to you. So really continuing that communication and just like finding out who can do what for you. And if they say no, they say no, but I'm asking all those questions.
No, that's great. And I think from the perspective, which is going to tie into our next question, is how deep is your supply chain support team, number one. I think pre-COVID, many operations might have had 3, 4, 5, 7. Some had 1, some had 2. But even now in today's environment, with all your supply chain issues, with all your secondary choices, all those questions that come up, is how are you managing some of this today with reduced labor in some aspects in supply chain? Because a lot of companies furloughed a lot of folks, and usually it was at the corporate office level because operationally you need to manage the restaurants. But at the same time, how are you dipping into now using either third-party companies, outsourcing certain things, or technology? And I appreciate you mentioned the inside track already. That's one of those things you're using. Mm-hmm. Are y'all using any other type of services?
We are. So we had our supply chain was a band of one prior to COVID, and going forward, she's been with the business for 19 years. So she has relationships with all of the vendors. I mean, she knows the business inside and out. Last year was not as much of a challenge for her. I mean, it was managing some things, but this year really became hard for her, where she just said, I need help because I'm not able to do my regular job. I'm just trying to figure out if a delivery is going to make it to this store, and I can't look at our inventory. I can't talk to vendors, and so our brand is owned by some owners that own another brand called Mountain Mike's Pizza. And Mountain Mike's completely outsources their supply chain, and they use Consolidated Concepts and RPP.
Awesome.
And so we were able to leverage, the owner that, he's also the CEO of Mountain Mike's. He was like, you should really talk to, Consolidated Concepts. It's up to you on how you want to manage it, but I highly suggest. So, we started in the summer, where we started with just the support with the distribution, because part of it too was just her frustration, I think, on what was happening with distribution, their frustration with I think us not understanding how how hard it was for them, or perceived how hard it was. We needed to have someone else come in to help really manage that relationship, and it's been awesome because it allows her to really kind of focus more on big picture and really look at what we're going to need and work with that. And it's also opened up her, as someone that's been by herself for 19 years, to understand that there's a lot of resources out there that she never really thought of or was able to leverage. And so as things have come up since, we've been able to leverage our support team with RPP to be able to really take care of some challenges that I think we would have been in big trouble if we had to try to figure that out ourselves.
Yeah. Operationally, I mean, franchise organizations, obviously even the corporately owned field operations, supply chain is in the middle. They're serving the C-suite, the company leadership and the directional, but they're also servicing the stores. Having to manage those simple tasks of inventory management, out of stocks, late trucks, problem solving isn't the strategy of supply chain sourcing. It's being proactive and strategic, as you were talking about. So I think those are all key things that, as we've talked about a few things, communication, being proactive, making some adjustments to operational components. I think from a perspective of how each operator is adapting today, there's a lot of great things, and that's why we want to make sure that we hear from the audience today of some of the things that you're doing out there to do it as well.
I have something to add to that too,
Sure.
because we also are lean supply chain and procurement management in our business, which was one, and this was prior to the pandemic, that we had made a decision that we were not going to bring on a purchasing team, that we were actually going to partner with the Buyer's Edge platform. So within our organization, we use Consolidated Concepts, we use Sundell and Associates for the purchasing aspect, and then I also use the produce arm called Fresh Concepts. And so I have benefited from them pre-pandemic, and during the pandemic, I leveraged them to help me with, cost increase tracking so that I can understand what's going on with my proteins, what's going on with my produce, and then that would allow me to understand those triggers that I needed to pull to raise prices, menu price analysis. So I had been partners prior to the pandemic, and I think the pandemic has only showed me more opportunities within the platform to utilize.
Got it. When I look at supply chain today with if you have one person in there, and I don't know how deep yours is now, so.
When I started with the company, we had 5. I was one of 5, and now we have 18.
Wow.
And we still need technology because not only do we have 200 plus Cheesecake, Grand Lux, and our Social Monk concepts, but in 2019 we bought Fox Restaurant Concepts, which is based out of Phoenix, and that's a whole nother 12 more concepts. So we physically, even with 17 people, we cannot handle everything and integrating them into our systems because we're publicly traded. They weren't. We have to bring them into our world on that piece. And technology is the only way to make it happen, keep it organized, make sure everybody's doing what they should be doing, and without it, we're going to miss things.
Technology, a lot of folks have capability on tech-enabled after the delivery, if you will. So the invoice comes in, you can scale information from the invoice and things like that, and price verify. There's a lot of stuff you can do there. It's the pre-planning, it's the pre-audit, it's the pre-inventory, it's all that tech transparency that I implore you to connect with either your distributor direct through a third party. There's companies like us that do what we do as well. We certainly have invested in our entire strategy around supply chain. We're not in the front-facing side of driving the sale. We want to drive the operational side. So I think those are some critical components. Every distributor, as we talked about, your distributor's not purposely not fulfilling the order. They need information. And the more you can integrate your data technology with what your needs are in front of to get to the distributor so they're proactive, but then you have to inspect rather than expect. Because if you're not looking over the shoulder, because they're doing distribution with less people today, let's face that. So operationally, most of the broadliners have cut back on some personnel, so you got to use tech to your advantage. So which brings us to, as we move forward in the environment, and over the last 18 months in my role within the organization, I deal with a lot of distributors, and we have over 600 clients in our portfolio. Many clients have come to us saying, we are struggling with our distributor today. We want to move. So it's like, is now a good time? Well, you got to balance that out because the distributor at this point, it's almost like a seller's market. If you think about what's going on in real estate today, if you own a house, you want to sell it, you're going to make the money because there's always somebody willing to pay more. Boats, cars, all that kind of stuff, it's a seller's market. In distribution today and even in manufacturing, you probably come across this with manufacturers, are you seeing a leverage that you feel at a disadvantage? And if so, how are you navigating through that? I'll start with you, Brenda, and we'll turn it to everybody because I'm sure there's a story from everybody here.
We are actually in the middle of an RFP for our distributor, Cisco. They know it, and therefore they're hitting us hard. And I feel like we've become transactional instead of a strategic partner with Cisco. And that's just, I think hopefully it's a sign of the times, meaning it's temporary, and this is just because they don't have labor and they're short-staffed. But we, as restaurant companies, have to hold our distributors accountable. So if they're going to raise our price and they're going to tell us we have to do this, then you know what? We're going to expect this, and this. Because in the past, it was kind of on a gentleman's handshake. Okay, we won't look at that 8% that you're supposed to purchase. We'll just let that slide. Now it's like, boom, no, you have to pay. You got to, and it's like you said, it is the distributor's market. And it's unfortunate, but I also feel like there's two schools of thought. One is it's a temporary solution or a temporary problem. And okay, do we pony up and pay that extra fee with in the contract it comes down, or we reevaluate after certain times? If we hit a certain benchmark, we have the opportunity to exit. So we're not tied into a contract that ends up being long-term when we see everybody else's pricing go down because we're past, all the complications. So I think holding the distributor accountable and just having an out. Somebody's going to have to pay, and if you don't, you're going to pay Peter to pay Paul to pay Ralph to. So it's all a tangled web, and I think it's also very difficult to change distributors. We have over 2,000 SKUs. Do you think a little mom and pop distributor wants to clear out their warehouse for our stuff? Probably not. So we have very limited resources that we can go to. So we just have to be better about holding them accountable and having an exit strategy.
And they're going to hold you accountable as well.
Absolutely.
I have seen more now than ever, if the contract says it, that's what they're holding you accountable to. Size of delivery, frequency of delivery, expectations on participation of categories and things like that. I think from an experience standpoint of where you're seeing with your distribution network, I think Cisco, PFG, Cisco, certainly the distributors, are out there trying to do what they need to do to move those cases. It's important to be, and just in all fairness, a good customer to the distributor and making sure that the distributor is being accountable to your needs as well. And I think you're right. Over the last several years, transactional conversations and arrangements have happened. It's like, what's your fee, what's your fee, what's your price, what's your price? It becomes a price game, and you wind up pushing the price down. And just in all fairness, when you look at what's going on, this is an opportunity for that marketplace, manufacturing, distribution, to kind of reset the bar a little bit. Because those programs that used to be really cheap now may not be so cheap anymore, because folks are looking for, where can I move my business, and I'm willing to pay more money if somebody's going to execute. So accountability and execution is really important. Any other thoughts around distribution or manufacturing? How do you manage through that?
I mean, you hit the nail on the head. It is a relationship game. And
Right.
I think that, whenever I sit down and have a vendor meeting, and if you don't bring your vendors in annually or semi-annually, then shame on you. You really should make time to do that. So you're sitting across the table and you're sharing, these are my expectations. But I always ask them, how is my team responding to you? How are they treating you? Is anybody disrespectful? Because to me, that's not in our core values, and I think that that's really important, that our relationships with our distributors understand that it's a give-take, but I'm going to ask you, just like you're going to ask me, for respect and consistency, and but I don't ever want to take for granted what they're doing for me, and I think I don't have to renegotiate my MDA, which thank goodness, but through this time, Cisco was telling other business partners that they have to cut the amount of cases they have on the truck. They have to get their orders in by 10 a.m. in the morning. Yep. And since we had developed such a strong relationship with them, that didn't affect me, because I was a priority customer of theirs, which really benefited me on the end.
That's a good call out. Transactional relationships are not going to survive the I got to have and demanding approach to the business. That's not going to work anymore. I think if anything, you got to look at that full rounded value of that relationship. A distributor plays such a key role, right? Their fulfillment of moving those boxes in from their back door to your back door on a consistent basis at the right time, at the right price, and the right quantity. There's so many things tugging at that today. Every distributor out there is faced with the labor shortage, the timing, the lead time, the communication, the ramp up and demand on volume. So I think it's critical that we want to hold them accountable. At the same time, let's make sure we're doing our part as a customer to communicate as proactive as we possibly can. How are we doing on time? Okay. So just want to make sure we have some time, and I hope we're thinking about some more questions out there as it relates to it. What other influencing factors are happening out there? And I know it's not a question on the board, so I'm going to hit everybody. As you see from a perspective of what's going on in the world of delivery and packaging and virtual restaurants, how is that affecting your brand specifically, and where do you see that going out there as far as the supply chain impacts?
So I think certainly the rise of third parties over this past year has been a big part of our business. I think that all of that is not just a result of the pandemic. I think it was already
consumer driving.
Yeah, this has just really kind of amplified it. For us, it is the challenge of being able to have the right to-go supplies, and bag. I mean everybody remembers it was like sanitizer was like liquid gold, but finding the right bag, getting that spec'd, understanding the cost of that. I mean, that's got to be built into the cost of the business. We've looked at that from a cost of goods standpoint, especially when we're sharing with our franchisees what the expected costs are. So really negotiating for that and finding the right partners for that, because where we are, you have to have everything tagged, and then everything has to be sealed, and there's a few things that have to happen before that product goes out, and those were things that a year ago or 2 years ago wasn't even part of our consideration set. So
I think as we've been kind of reflecting on some of the topics, talking about being collaborative, communication, proactive, utilize technology, third party, do all those little things. But I think internally, as a leadership team, as an operations team, as a culinary team, has that mindset changed internally on that side? I know some of you are the leaders, so you're kind of making those decisions, but I know when you take a big organization that is a lot of culinary chef driven, you have so many guardrails that you have to follow on your menu ingredients. But if it's an item that this is the item we love forever and there's no changing, has there any thoughts of, maybe there is an alternative that we're okay with? Has some of that changed at all?
Oh yeah.
No, not on your side.
No.
You're still very stuck into the 2,000 items have to be.
Yeah.
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 Okay.
Now, our menu is huge.
Yeah.
But we did, this is ironic, we did decrease it by about 20 dishes when pandemic first started. And then we slowly introduced them back because we realized, hey, we can do this. Mm-hmm. Okay. But I think it's very hard for us to change to even get a secondary spec approved. Right. No, unless you're in the thick of it, like all of us, you really don't get it.
Right.
So I don't think culinary quite understands when we say, no, I'm sorry. They go, no, we're the Cheesecake Factory. You can get it. I'm like, okay.
No, I understand. That winds up being, and I was on the other side of that, so I can certainly respect that and understand it for sure. I think certainly it makes a time where the value of an operator, right? From a distributor standpoint, when you look at proprietary merchandise, those are Achilles' heel for a distributor. They don't want to tie up their real estate, and that's why I go back to that the seller's market component. I think, as you already mentioned, you're not doing a lot of those type of changes, but are you seeing where you're willing to look at an alternative if it meets your specifications on your brands?
Yeah.
So we had what I call the asteroid about to hit the earth in the summer, where a core product that we use, the vendor that we've been with for 18 years said, hey, we're not able to get the material to be able to package what you need. So we're shutting our plant down tomorrow. And we'll let you know when we reopen. And it's like we we had 3 weeks, we looked at what we had in inventory, we had 3 weeks worth, so we worked with Bizan and Shelley and just said, we need to look at all the alternate specs from other vendors, and we've just got to go through. We taste tested and looked at a lot of things, and in some cases it wasn't quite the same match. But, I also think that a lot of the guests are used to, opening the app for Starbucks or going to a Starbucks and seeing we're out of stock or we don't have that. And in some cases where it wasn't the right match, as much as it kills me, we had to just say we're not going to offer that until we get that product back in. But for the most part, we were able to navigate around it. But, we wouldn't have done that
In normal times.
In normal times,
Yeah.
So.
But I also heard you say partnership.
Yeah.
Relationships. You keep mentioning relationships. And what's nice is that I was on the procurement side and I stepped into the finance side. And now I'm looking inside, outside looking in at the buyers, and I'm seeing different strategies and tactics that the buyers use. And there's one that is just, I don't want to say a bully because I don't hear exactly what he says, but I know just some manufacturers don't want to work with them. Now let's say you burned a bridge.
That's right.
You don't even know what your alternatives are. You burn the bridge, and now you have to go back to them with your tail between your legs, and they're going to charge you double.
Yeah.
And that's because you didn't treat them
Fairly.
like
Like
a partner.
For us, I think flexibility within our brand has really been huge. And you know what? There's times that we had to go to a sub, and we actually found that it was a better product. I switched our fried flour from a gluten-full one to a gluten-free one, and I found out that I actually had a better, crispier end product. So I think that there could be some successes out of some of the flexibility adaptations that we've had to make. But quality is still the number one deciding factor within our organization.
Yep. And it's amazing to think through the product selections, and part of evolution of we use this product was pricing and contract pricing and all that kind of stuff. And in some cases now those are alternatives that suppliers are saying we're not re-upping that contract any longer just because we can't keep up with it. We really don't have the bandwidth to shut down the line and rebrand the product into a new line. We want to go to the generic item. So that all those things kind of factor into collaboration, communication, being flexible, being respectful, being a good partner to your distributor, your manufacturers, because transactional is going to lose. And I think I can speak to that perspective is if everything is based on just what your price is and being cheapest, at the end of the day, price doesn't drive value. It might get you a better initial perspective of ROI of that item, but if you can't get it, it doesn't matter what it costs. And I think over the last 18 months, there's been a lot of, I gotta have, I need, just get it. And I think, the perspective is now, how do we really bring this home from a collaboration in the supply chain and distribution with manufacturing? You gotta use all the tools in the toolbox, because supply chain, being fair, is always been, or the restaurant segment in that engagement with distribution and suppliers, technology has not always been truly connected. The ordering process, the reports after the fact, there's tons and tons of reports on every distributor's portal of what I was on my invoice. You want to know what's before that. You want to know the inventory, you want to know the purchase order, you want to know the pricing of that purchase order, you want to know your markup margin and fee, and everything else is all cohesive before the invoice hits the door. You want to know the issue with the out of stock before the order's coming. So all those are key. It's communication. And I think those are some of the key components we're kind of resonating between everybody is communication, collaboration, utilizing all the tools in the toolbox. I know from a perspective of kind of thinking about the future, what's going to go on. We've seen cost of goods increase, and depending on where you look and who you're talking to, my understanding is they've added another 20 plus tankers off the coast of California that can't get unloaded. So we're going to see some more issues in supply chain there. I don't see I think fuel came down a penny a gallon or whatever it was, or 2 pennies over the last couple of weeks, but hopefully we can see some relief there. Labor, we know that's already challenged depending on where you're at. Minimum wage, you're paying almost double what minimum wages are in most markets today. So there's a lot of things pulling that supply chain. Just be prepared, because not only, I'm sure each one of you may be using third-party delivery in some aspect. So not only do you have a higher cost of goods, you've got a third-party delivery fee, you have the the cost associated just with goods going up at this point, utilize all your tools to make sure you're driving inspection of what your costs are today. I think we're down to probably about 6 or 7 minutes left. I'm hoping that we can kind of add some questions from the audience here. So we have somebody here in the center. Mark's coming up with the mic to kind of ask the team. Come on, Mike.
Can you speak to contracting and the future 3, 6, 9 months of contracting and where that's at? It's a little dicey right now.
Go ahead.
Yeah, so I'm actually I'm doing that for our fry oil right now. And so there's some things that you can put in there. I'm doing a three-month contract on my fry oil, but I'm putting in there if the oil price trades at a lower rate than where I'm currently at, then they're going to lock in on that, and that's what's going to happen in my quarter 2. So I'm not committing for a long period of time, because that was my first question. If I commit to you at this price, what happens if the price goes down in February? I'm not going to reap that. But now we put that stop gap in there that if the price does go down, I'm assured that my next set of contract pricing will be lower.
Interesting call out there, because a lot of the produce companies, when they do contracting, they do high-lows. So, maybe there are some components in other commodity markets that might make sense to have a high-low conversation. It will follow the market to some degree. It won't go any lower than that and any higher than that. So that's another call out. I think everything's changed, the dynamics. When you look at reported information from some of the broadliners or what they're seeing, the market basket pricing, I think June, July for a couple of the big distributors was 8% and 11% for that month year over year. Year to date, it could be anywhere from 2.5% to 4%. The trend looking forward, conservatively, maybe it's a couple points. At minimum, I think it could be pushing that 4% area, for cost inflation over the year as an aggregate. It's being proactive. Everything we're doing today, you got to get in front of it. I think the old way of just, hitting the renewal button all the time, not going to happen. I think the suppliers are actually going, here's the new price, it's double. Yes, I know. If you don't do it, I know I can sell it to somebody else at the higher price anyway.
Ask for transparency too. I think that's
Key,
really important.
very key. Question?
Yeah, hi. I work for an equipment manufacturer. It's pretty interesting to see how broad-based these problems really are, because the story you're telling on the kitchen side is very similar to what we're living in the equipment side on the supply. We've also been investing in back-of-the-house automation. One of the lessons we've learned in some of those early journeys is how much gain we can get collaboratively with your supply chain. So the point is, I'll give you just a simple example. If you're ever at home and you're trying to make a fast sandwich and you're peeling a piece of cheese off of a stack, that's virtually impossible for a machine to do, but it's very easy for us to take a block of cheese and slice it as you need it as part of an automation project. So I wonder if you could comment a little bit. Do you see the ability for the food supply chain to move as technology changes how we do things in the kitchen?
Well, it's an interesting question, because if you think about retail, so every time you're at the checkout counter in retail, the replenishment is automatic based on what's being sold, right? We don't have that connection from what you're selling at an operation to the distributor who's pushing it through to manufacturing. So I think there's a lot of that capability that people are going to look at some of those processes, what can be automated. I think there's some Robotrons and stuff here today that can do certain things. From a guest experience standpoint, that's kind of that risk-reward scenario. If you have kiosks and self-pay and self-order and self-this and self-that, then it becomes a transactional a little bit. So you got to be careful not to distort the experience, if that makes sense. Because I think we talked about it earlier, one of the sessions is, how do you get people back to the brick and mortar restaurants to have that people together relationship meal experience? So back of the house, I think there's some capability there for sure. I'm still, we want to make things easier, but we want to make sure the experience is still there too. Another question?
I appreciate hearing you guys talk on a very big scale. I own a small group of restaurants. We have 6 restaurants. The little tiny guy got destroyed, murdered, with Cisco firing them, refusing to deliver to them, 25 case minimum for a restaurant that does 600,000-700,000 gross in a year, but some guy's dream. We've teamed up to help some of the smaller guys. We're way small compared to you, but so I had like resisted going all in on one broadliner of you, and I was so grateful that I did, because we're not Cheesecake Factory, and like U.S. Foods is like out of strawberries this week because they're probably selling the Cheesecake Factory, you know. So, you know, so I was happy to be able to have a good relationship with all these different people, you know, with U.S. Foods and Cisco and Shamrock and PFG, even though like traditional thinking would be that you got to go all in on just Cisco or just U.S. Foods. So I just kind of want to see if you would like speak to that. And then also along those lines, do you think that they're going to start for the smaller guys doing like what the liquor often does, and start like bundling or entangling you with things that are hard to get, like 9x9 to-go containers were super hard to get. So I tried to order like 100 cases, and they were like, no. And so do you think that they'll start to say, just like if you want to get your Pappy, you got to have like all this other crap, right? So do you think that that's going to make its way to the food industry, probably more for the smaller, like the $1 to $10 million guy, not a publicly traded company?
No, it's a great question, and I think, you know, just picking up on my experience back from Cisco days, is like, if I'm selling you the cups, I want to sell the straws, the lids, and all the other stuff that goes with it. I think some distributors are starting to adapt the technology to value price or value provide something back to the operators if you're using multiple categories, if your deliveries are X. So I think the system is changing. You know, in some cases where the pricing used to be at the whim of the person that you're talking to that day, they're going to more algorithm type pricing, more strategic, you know, volume based. So there are some of those components that may come into play. I mean, again, if you're normally buying 4 cases a week of an X product from a distributor, you try to buy 40, they're going to cut it off. Every one of them are doing it today just because they don't want somebody to kind of hoard the market a little bit on certain products. It happens out there. And I think even strategically, as you're communicating to the field, it's like, order more, put more on the shelf. You can do that, but make sure you're communicating to your distributor that in some aspects, so that way you're not taking it away from your sister location or other location to some degree. Communication is still key. Addressing the size, I think you're actually in a pretty good sweet spot for distributors today, because they like that smaller emerging growth. Not that they don't like the large customers, don't get me wrong.
Super easy for the kid product. They call me.
Yeah.
Yep. Absolutely. And I think from the perspective of investing in what you're doing, because your proprietary mix is so much lower than some of the chain business, so they're thinking they're going to have the more capability to sell you their specific house brands of product. So they're really trying to gear a lot of that stuff towards the independent operator. In my world at Cisco in the national account side before, it was always, let's take care of the street customer first, the independent operator, the multi-unit, they've got all that stuff already. So it's a delicate balance, but I think there's still solutions and sources for yourself, even using all of those distributors you were just talking about, to get some additional value. And I would definitely strongly advise you to look at some of those solutions that not only we have, but other people have in the marketplace to help. Mark?
Hello, Vince. Hey, I'm just wondering from your panel, you know, obviously assured supply of safe product is our first order of business, but we've seen, you know, food prices just go, you know, out of the sky. At what point, my question is, do the unit level economics at the restaurant become, you know, untenable to continue to operate with product costs that's going, you know, 2, 3, 4, 5% above what it is normally?
That's a great question. I think from the operator perspective is like, when you go back to operations or leadership going, that item that used to be $5.65 a pound is now $12. What do you want to do? Do you make an adjustment to the menu price, or you take it off the menu, being proactive? In some cases, I've seen people go, you know what, let's just bear through it. Do not change the guest experience, because they will remember it for sure. I think we ran out of time, and I apologize. I'm sure there's some more questions, and certainly the panel's going to be here, and myself, if there's additional questions you want to talk at the end. Thank you so much for coming today. Good luck out there. Let us know how we can help, okay? Thank you, everybody. Really appreciate you.